Good morning, traders, and welcome to the live trading webinar here at Bookmap with Scott Pulcini, a futures trader. We do this every Thursday at 10 a.m. East Coast time. And Scott, as you know, professional trader, maybe you don't know his history. And Scott, however, he's been trading for over 20 years and has a very unique story. He was written about in Brett Steenbarger's trader performance book about psychology, etc. Very popular book. Anyway, let's jump in here, and I will post into the chat Scott's contact information. He does offer mentorship and education. He has a trading room and educational course, etc. So we need to go through the disclosures here, and then we'll jump right in. All right, general disclosure, and this is important, so please listen. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Live trading is in simulation, demo, paper trading mode, and strictly for educational purposes. Live trading executed in simulation cannot accurately represent realistic trading performance. Just one contract will make a difference. All right, so our simulator is excellent within Bookmap. However, it's not the same as live. Anyway, risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security nor lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. All right, so Scott is just coming into the webinar here. He'll be here in just a second. Was just looking at the S&P E-mini. Pretty choppy here at the moment. On the way down, though, as you guys can see, but a lot of chop in this area here. We are below the 4100, as you guys can see here. All right, so I'm very curious to see what Scott comes up with. As you guys know, he looks at the stops and icebergs on multiple markets, up to 20 different markets he's looking at. And he's looking at the stops and icebergs in the futures markets to clue him into what's going on. So it is an alert. It is not a signal. And then he goes in and takes a look at what the event is. Does it meet his thresholds? If it does, then he is interested in a position. He looks at the bigger picture. He uses volume profile and some other elements to look at the bigger picture, but it is the real-time volume here in Bookmap that gives him the insight for making a trading decision.
I'm back.
Okay, Scott, why don't you go ahead and share your screen, and then I can rebroadcast it. All right.
See my screen?
Yes, you're all set.
Okay. All right. So this is NASDAQ. Just had a couple back-to-back stop runs here. By stop runs, you see 176 here, and then you have another 185 here. So I just made this one big zone. This is 50-point zone, which is not crazy big, but it's not small either. ATR right now, 5-minute ATR is 37.2 points. So I'm waiting to see which way I want to trade this based on how we break out of here. Bigger picture stuff. I'll start with NASDAQ. This was drawer. So we had, I mean, you can basically make this one bigger balance here, and we're kind of just teetering here, but the events yesterday, this balance here, that's a failed breakout. That is bearish, and then you led to this move down lower. We caught some of this in my room in the S&P yesterday. This moved down, and you can see now all we really did was retest.
Soybean Ice July Icebergs ITS 150 contracts.
Retest the high volume out of this and failed. So again, this was signaling something was up, where this didn't launch through here yesterday, and that was a failed breakout. And now we can't get back above this high volume node, and now we're kind of just hanging here. So this could easily come back up here and keep forming the bigger balance, or this just collapses. So this is, you can see these zones that I draw. These zones are all based on the 4 important areas of charting. So tops and bottoms of balance areas are one reason you can draw them. Directional conviction is another. Gaps are directional conviction as well. And then the other 2 important areas are high volume nodes, which we just talked about on this other one. I don't draw those as much just because I don't want too many lines on my chart. And then buying and selling tails are very important as well. So you see here in this zone, this actually, I try to draw them back to where they're, where the relevance started. And you can see here, this was an important zone: selling tail, directional conviction, directional conviction, directional conviction. And then we came up here again, and then we couldn't get through this zone again. Gap down, directional conviction. Then we finally got through this zone, and then, it's just like any other charting aspect as far as resistance now becomes support. So we finally got through, and it served as support, right? So you can see it's still supporting it. Try to get through it here as another buying tail. So that is short-term bullish that it's holding here. But as far as this stuff, this most recent stuff, I'm still leaning for that. But this could hold and just continue to build this bigger balance. So this is, this is a zone you can trade it away, is what I'm saying, right? Because this is a bigger balance area. We're just at the bottom of this.
151 contracts.
So we're just waiting to see what happens out of here, out of this stop run, and I'll play it either way. So then what I do to try to decide if I'm going to be aggressive or not is I use Ludwig levels. We call them lugs in the room. Very powerful, especially when you can overlay this real-time volume here. So you can see here we're above the yellow lug. So I typically take trades aggressively to the long side above the yellow lug, to the downside below the yellow lug. I will take setups. So for instance, say this turns into a bearish setup, that zone I just drew, right? Well, since we're above the yellow lug, I will wait for full ATR retest failure, and then I'll go short, right? So I need to see that to go short. On the long side, I'll go long aggressively. The other stuff I look at is market profile composites, which is just basically the bigger picture stuff I was just showing you, just framed in a different way. So I like to draw composites when multiple days merge, value areas of days merge, 70% of the trade for that day if they merge, and I draw what's called a composite, and then you can come up with a story of what's going on based on how it's reacting to these composites. So you can see here, we opened up, we tried to break down into this bigger one, and we rejected it. Now we accept it right back into this one. So if this accepts, now we got the volume set up, which was perfect right at the bottom of this. If this holds, then I'm expecting this to get back up here, right? And that's all in line with what I'm seeing here with this here. So what I want to do for this trade is get in this aggressively to the long side. If we break out of here, so the way I do that is I look at my 5-minute ATR. You can see here it's 36.93. So that's that right there. You can see it here. It's just an easier way to look at it. But current ATR is 36.93, so 37 points above the zone. I've now gone a little bit outside ATR. If you guys remember, I used to be like 70% of an ATR, then 80, then 90, and I kept getting ticked. I would put in my order 90% of an ATR, and it would come up here. It would fill me that exact tick, and then do that. So then I gradually, now I'm moving. It's not worth the few points I'm trying to save, because you have these algos that pick up these volume areas, and they will revert it once it gets an ATR away from there if nothing's going on. So I've now gone a little outside an ATR for my entry. So that means I'm going to get in, it's 37.75, so I'll give it 2 points outside, so I'll go 39 points out of this zone. And you can see the zone's large, and I'm going 39 points out of the zone, so the most I can trade here is a one lot, right, because of the risk involved. And we talk about this every week. Certain traders don't want to risk that much. That they they want to try to make 40 points, risking 20. So again, guys, it doesn't matter what you want to risk. The market matters what the market deems important, right? This is an important volume area. The volatility is pretty high. You've got to place your stops outside of volume areas and use the volatility to judge that. And if it means risking more, you've got to risk more, because on the flip side, I have an opportunity for a bigger move because of the volatility. So it's all what's the word I'm looking for? Not relevant, but I can't think of the word I'm looking for. But it's all tied together. So the point is, if you're trading where you're just putting in trades in this or ES, where you say, I want to put in a, I only want to, I'm trying to make 4 points, risking 2. This is not, it's just not viable with these algos that run 90% of the market, 85 to 90% of the market. You're going to get whipsawed almost every time. So I know I go over the same stuff every week, but there's new traders on here, and this is the most important aspect. If you're trying to scalp, you're not going to make it if you're doing it by hand. If you know how to write programs and you have a efficient program, then you may be able to compete with this big money in the algos. But other than that, you have to use these volume areas to judge where your stop should be, and so on and so forth. So ATR is now up to 39.9, so we're looking at 40 points now. So we're talking 40 points above here is 25. We'll go a little bit outside there, so 27 will be my entry. Again, the most I can put on here is a 1 guy. Let's see, let's put up a little waterboarding here. You can see these FANG stocks. Again, these are the highest weighted stocks in the indices that drive the futures, right? So it would behoove you to have something like this. This is called tick strike. We talk about this every week too. And again, these are metered, so these go from
150 contracts.
We're gonna have to take a look at soybean. There's a lot of stuff going on there.
Soybean ice July iceberg sells ES 172 contracts.
I'm about to get filled on this. All right, filled. Hold on 1 second. Let me. Multiple accounts I'm trading here, so I'm trying to. So now that I'm filled, my stop's got to go an ATR below this zone, this yellow zone where all those stops fired, right? And that's the way I trade and the way you should trade as well, because you want to get it. This thing could easily pull back in here, and it really means nothing, right? It hasn't violated this area that I drew, right? So I make the market get back through this entire area, a full 5-minute ATR below here to prove I'm wrong. Other than that, if you're placing, if you're getting long right here, we just went over this, but if you're getting long and you're like, all right, I'm in, but I want to risk 20 points. Well, you can see here, these are algos playing games, right? And this is how they take everybody's money. So I make them prove they can get through here. So my stop's going to be 40 points below here. Yes, it's a large risk, but I think if this thing gets rolling, I think we can cover this entire all the way back to where this directional conviction started yesterday. Because we did hold this zone, buying tail. I think we can get all the way back up here. So that's, 200 points away. Right? So I'm risking probably 100 to make 200. That's what you want in your trading. You want usually at least 2 to 1 in your risk reward. Every trade's not going to be that way. Especially if something happens now and I have to get out because of an opposing setup. But that's my, when I put on trades, I think that can happen. And then when you look at this too, I think the minimum this can get to now, you can see we're kind of struggling at the point of control, but the minimum is up here, 12.7. So we'll see. Again, I only have one on, so I'll make a decision when we get up there if I need to get out, but I'm trying to see if we can get to, actually let's see where the red lug is as well. Yeah, so the red lug is right around the top of this as well, so we'll make a judgment when we get up there. I usually get out at red lug. So this is basically a 1-to-1 trade if this works for me, because I probably won't mess around with the red lug. I'll just get out and wait for a new setup. Let's see what this line looks like in here. So you want to keep an eye on this relative volume. talk about this all the time as well. This is telling you this is exact time period for the last 30 days. I have mine set for. You can set it for whatever you want. You can put it for the last week, last 3 days, whatever. Mine's for 30 days. So you can see pre-market, there's some stuff going on here, right? This is a lot of volume. And now we're trying to get above all of that. So all these aggressive sellers pre-market are now sweating it and about to, like we just saw the first stop run, right? That was a puke. Stop runs are pukes. I would expect with all this volume that came in pre-market that are now about to be underwater, you're going to be seeing some more pukes on the way up, right? So the way you can judge these too, or mark these, you can mark these just like SI indicator zones, right? This is where all this volume came in. That's the zone. So if we bust out of here, we may return and do that. But this isn't, you want to pay attention to this stuff. And then you also want to pay attention to when this starts to dissipate. When that happens, then you're looking at, this type of trade. You can see here how the volume was terrible. Obviously, it was overnight, but it doesn't matter. It's all relative, right? The point is, these where algos just whipsaw back and forth, take your money until the big money comes in and runs them over, right? So right now, the volume's pretty pathetic. So I would not expect, until we can move a little higher with this may do one of these. And that's why you don't want to be putting your stops close, because you just are going to get whipsawed right out of the trade. So we are in that. Let's take a look at soybeans there. There's a lot of stuff going on there earlier. I already drew some zones in here. Any questions on any of that, Bruce?
Yeah, no, not at the moment. We're pretty good.
Got some sell ice coming here in ES. We'll go over some of these zones here in a second.
By GC, 128 contracts.
And we'll go to gold. I don't really want to trade that unless there's icebergs in there. Kind of ban that from my trading because it's just stop run after stop run, back and forth, whipsaw. So anyway, this is soybeans. We had some big buy ice. You can see all this buy ice here earlier. This is 214, another 300, another 250 or 300. This is a very important area, and now it's kind of, you have some dueling ice in here too. So that's
Scott, let me know if you wanted me to cover the sliding window in a little more detail.
We'll go over that here shortly, because this is actually in sliding, because I wanted to see the difference between this versus see what this looks like on the so I have this computer at reset mode, this Bookmap on reset mode, just so I can see the difference. I don't have the zones run obviously, but you can see when you have it on reset mode, it resets every minute.
Yeah. It's gonna
But we'll come back. Let me
Sure.
So I'm just going to keep this zone in right here that I have in and play off of that. So that's step one. I want to see bigger picture. Where are we? You should have all this done pre-market, right? Before you start trading your markets, know where we're at, because this stuff doesn't change as much as the shorter term stuff, obviously, right? So this is an important area. You can see directional conviction. Selling tail led to that move, directional conviction. So we did get above there, and it did act as support. Resistance was then support, and then it broke through. So now again, this is still an important area that this could fail. If it gets above here, then I think we can make it up to these areas. So let me turn down this squawk box real quick. Should be better. So, I mean, because this is the most recent thing that happened, right? I mean, actually, it did start here. There's one of the four important areas. There's a selling tail, and then it kind of kept going here. But, anywhere in this area, I think this could pause. So you have to lean more for that than that because of what happened recently. But this is where, if you're a trader here, you have his bar charts. You're like, well, what do I do here? Do I play this as a fade? Do I play it, once we get above here to do that? You're just relying on bar charts. Well, this stuff is the most important thing you can be using, right? You want to see what the big money is doing and the dumb money is doing in these areas. And you can see somebody is in here. You can see this iceberg on chart as well. Somebody's in here really buying the crap out of this thing, right? You can see it. There is some selling too. You can see some sell ice, but overall,
NQ Ice
This is
Iceberg
a
by
lot.
NQ, 152 contracts.
This market is coming back. Did I ever put my stop in there, by the way? I don't think I did. All right, so we're gonna go. ATR right now is 44.5. So we're gonna go. Let's just make it a cool 50 points below here. 85. That'll put me below that spot gamma level too. So you know, if this fails, well, this is a. I probably could even add a one lot on for how much I'm risking here, but that's another 40 points. Yeah, that's about right. Yeah, one lot's right. So again, I have that spreadsheet in my trade room. I keep getting requests for this. This is one of the perks of the trade room, guys. So if you want this, then join the trade room. I just lost it. There it is. All right. So basically, what I was risking there was in the size of I was risking like 150 points there. That's a lot of risk. But let's see here. I still think I could put on one. Yeah. So the point I can't, so you can see ES right here, right? So if I need to be risking more than like 80 points or what is it? Yeah, 9. If I get to 100 points in risk in ES, which does happen occasionally, I can't even put on the trade. Well, you can trade micros, right? But I was just seeing, make sure I can even put a one lot on NASDAQ, and I can't all the way up to like, I think it's like 200 points or something. Or basically I can't trade based on the account size. Yeah, you can see that like 250 points. So I mean, I have the right size on, and my stop is in an area where, so there was pre-market, there was, or I won't at the open, there was the 6 setup, my most recent setup that I'm going to put out on my new course that should be done here soon. It's called Step Brothers, where you get stop runs and ice in the same direction. So I think this was this right here. Yeah, sell ice. So you can see it was sell stop runs and sell ice. That was this area here. So what I normally do is I do not stop out in the middle of a prior zone, but I'm already risking so much, so I'm going to take it on the chin if this stops me out anyway. But normally, if this wasn't such crazy risk, I would put my stop below this whole zone. I don't like stopping out right in the
S&P
middle of it.
Stocks LES, 500 contracts.
Right, but if I get stopped out on that trade, that is really good information. That means this thing I think is going to die. So let's get this to this threshold.
S&P Iceberg by ES, 705 contracts.
You can see the vice. So this is the double whammy setup. Let me get this out of here because this is already traded up and through there. So you can see this is still coming in 800 buy ice and 515 sell stops. So this is the dumb money, the retail trader. Again, don't be offended. I'm a retail trader nowadays too. Into the waiting hands of big buy money, big buy ice, right? Hidden orders. So we're going to draw that. And that is called a double whammy, one of my 6 setups. And we will color it appropriately. I try to color the double whammies dark blue. And then we will judge. If this breaks, this is going to be a quick trip down. And the other thing we'll look at is spot gamma. Spot gamma basically says if we breach this 4100 area.
S&P Iceberg by ES, 700 contracts.
All right. Crude numbers come out in 5 minutes. And natural gas. So you can see someone's in here buying, trying to hold this up right here, right? So this is ES. So if this breaks, this is say goodnight, in my opinion. You can see here. It's an important zone. So this was yesterday's balance. You can see we retested just the bottom of it, held. This zone was important, directional conviction. Back here, directional conviction. Gap down, directional conviction, selling tail. So this is an important zone. So if this zone breaks, and you can see there's no structure until down here. So if this zone breaks, I expect a straight move down into these areas. The 4,000 area is a spot gamma level. It's actually just below it, which is pretty confluent with this most recent balance. This you see colored here was a ton of buy ice. I think if we break this zone, which looks like it's about to happen, it's a quick trip. So like I was saying, I'm going to take it on the chin in this NASDAQ trade, but then I will be looking for some short setups, and it's going to be glorious. As you can see here, there is just really, you got this little stuff right here from last Wednesday. Other than that, there is no structure till down here. And this could be literally a pretty quick trip. 500 plus points. So if you don't think that can happen, it can happen. So spot gamma quickly, we look at this every day as well. Let me get my stop. I don't have my stops in on my other account, so 1 second. If there's any questions, Bruce Fireman, why stops in?
Yeah, no questions.
All right, so let's see if this can hold. It's not looking real promising, but again, if this stuff breaks, it's going to be glorious to the downside. So I'm just going to show you guys. Let's take a look at our. I was going to show you spot gamma, but let's. So we're right at the yellow lug, and you can see, like, if this breaks. We get some waterboarding going, starting right now. If this breaks here,
S&P Iceberg by ES 700 contracts.
it had its chance. We kind of failed at point of control.
S&P
This should hold.
Stop sell ES 730 contracts.
If this breaks, we get into this. This is going to be a trip into this guy and probably lower. So that's NASDAQ. Let's look at ES real quick. I just heard some other stuff in there. This is not looking promising to the long. Really nothing here. This was just yesterday. So but we are below the yellow lug, so I can take this trade aggressively out of this zone. So you got more buy ice in here. Another 750. Another huge stop run. So I'm just going to make this one bigger zone. You could make this one zone on its own. Actually, let's do that so I don't have to have as much risk on this trade if I end up shorting this. So this was the most recent one, right? You see 740, another 740, another 740 buy ice, another 700 stop run. So that's this. We'll have to make it a different color so I don't confuse myself. And we will trade off of this. You always want to defer to the most recent setup with your trading, and I get questions all the time in my room. Well, prior zones, how do you play them? The only time I'll play a prior zone if other things have fired off after then, if it leads to directional conviction, right? So like I was talking about yesterday, we caught this short in the morning. This move down here, right? And there was a bunch of this. This was a setup. It was a double whammy setup. Actually, I'll show you that right here quickly. Yesterday. That was the final. Hold on. It was just good for you guys to see, see these setups. Why is this not scrolling for me?
Soybean ice July iceberg buys ES 150 contracts.
So this is this. We took this trade yesterday. I took it aggressively because it was in that important zone. We can go over that, but we had a bunch of sell ice here. It was actually double whammies. This sell ice made these stop runs look tiny, but these were both 500, and this is the short we took in my trade room. It was torturous for a while, and then we broke like 60 points. So my point is, I told the room yesterday, because I took off for golf in the afternoon, I said if we return to the zone, no matter what happens down here, at these lower prices, 4,100, when we return to this zone, it's still important you can play it on a retest because it led to this huge down move. Right, so that's when you want to play prior zones.
Iceberg sell NG 154 contracts.
All right, so we'll see what happens here. So I could play this. Did I get stopped out of NASDAQ? Let me guess, I got stopped out of the tick. No, still alive for now.
Nat gas iceberg sell NG 153 contracts.
So we'll go to nat gas here too. That's the number coming out. So it's obviously there's going to be some big players in there, but we can still play it after this number, after everything subsides a little bit. So now this is the most. So I will play.
Iceberg by NG 161 contracts.
It's going to be very scary being long both these markets, but I mean, so this is the point, right? Like this thing looks like it's going to die,
100.
right? But the real-time volume is telling me it's not ready. Like you're getting this. If this gets a little higher, this gets an ATR above these zones that I just drew. That's bullish. Okay, if this thing is truly bearish right now, you shouldn't be seeing bullish real-time volume come in. right? So I'll play it to the long side. Again, it's a little scary, but so this zone was at 76.25. ATR in here is 10.76. So do we get round up? So 11 points. So to play this, we got to be 11 points out of here up to play retest failure, right? Because we're below the yellow lug, so I wait for full ATR retest failure. So did we get up to 88? We did not. Oh, I'm sorry, 87. Top of this was, so 77.25 is 11 points. We got almost, so this is what I'm talking about, guys. Like, look at these algos. When you get these events, these volume events, when you get an ATR, these algos come in and snap it back, right? So so if we retest this zone and then fail back out of here more than an ATR, I will go long this market. But again, you want to wait for the retest failure. It's not, you can get in, we talk about this all the time. This is the science, right? The art is how you play these zones. The way I play them, if I'm going to be conservative in my entry, I wait for a full ATR, I wait for the retest, then I wait for it to get above the ATR, and then I'll go long, and then my stop goes an ATR below. You can say, I love this. This is a bullish setup. This is my, my 14 things I have on my chart, which a lot of you guys have, which you shouldn't. But this is all pointing to bullish. I'm gonna buy this as soon as it pulls back into this zone. Okay, you can do that, right? And you're not risking as much. But the odds of this, again, it's a much better odds trade from my experience if you wait for it to get an ATR out of there and then play it, right? So, but you can do whatever you want. It's your money. This is the science. There's no disputing what this is. How you play them, it's up to you, right? But I do these webinars to show you how I play them. So you can see here, we did retest this zone, this first one. That was that. But I'm not going to go long off that. I need to see a retest of this zone. If not, you could, again, this happened first. This is the most recent, this light blue zone. So that's why I'm waiting for that. But you could possibly play that. I will wait. Again, if I'm going long this, I'm being very conservative because I think this thing's going to die. So if we do that, then I'll go long. Especially because then I'll be long both these markets when I think both of them are going to die. So again, guys, it doesn't matter what I think, right? You can always have an opinion. You always want an opinion. You want to come up with, when you look at your bigger picture stuff, you come up with what's called a thesis, right? But you're ready to flip when things don't work out, right? And many, many times of what should happen or what looks like it should happen, when the opposite happens, the move is that much bigger, right? So you can see we're just bouncing around this yellow lug right now in ES. So I'm still waiting for retest failure. I will go long. And also the short idea is out the window now for this particular setup, because we got in for this one because we got an ATR above there, right? So I can't so for instance, if this were to do this, turn around and then break this zone, well, I can't play this as a short setup anymore because we got a full ATR above here. That's just the way I do it. It's disqualified itself from a short. So if we do that, then I need to see new setups, and then I'll go short aggressively. Hopefully that makes sense. I still think this is going to die, but we shall see. All right, so I'm just hanging around here. This was a huge risk trade, but I didn't do anything wrong here. I played my rules. My stops where it should be. You see, I did stay outside the ATR the first time, and then I avoided that stop out. So that hopefully will hold. If not, I'll take my loss, and I'll be looking for shorts. All right, let's see what's going on. Well, this thing does nothing. See what's going on in soybeans. Still hanging around the zone. More huge buy ice. Wow. I'm just going to make this one big zone. Again, I mean, you've got to just adjust to what's going on. Like, I don't like to make, 10-cent zones in soybeans, but this is a really important. You see all this. This is huge investment, right? And you got to remember, there's someone on the other side of these trades. So there are a lot of traders loaded up in this area. Can almost guarantee you, whatever way we break out of the zone is going to be a monster trade, right? And then I try to judge if I want to get in aggressively, so on and so forth. So let's just take one more look, so I don't remember what I was talking about on this market, because it feels like it was a month ago. Above the yellow lug. Market profile. This is looking bullish. We are back. This is the most recent. This is I think a 2-day composite here. Yesterday and the day before, you can see that. That's this. We opened up, launched out of there. I could probably delete this one from before. Now let's do that just so it's not confusing. Well, let's see where that was. So I'm just gonna, that was over here. We already did trade up and down through it. So I'm gonna cut that one off here. You guys, you get all the, part of my trade room, you get I have all these templates in there too, so you can literally just import this to your Sierra chart and you don't have to try to build it, because trust me, Sierra chart is cheap for a reason, because you got to do everything yourself, and I mean everything. You build a bar chart, like you have to build the bars. I mean, when I first started playing with this thing, it was like, it took me like 3 hours just to build a bar chart. So just realize, this thing is very reliable, and you can use it, and it's very cheap, but it's cheap for a reason, because you have to do everything yourself. So anyway, this is looking bullish from this story standpoint. We ripped out of this one this morning, and now we're holding inside here. So if that, and this is where all this buy ice is. So if this breaks above, next stop should be up near here. That's 20 cents away, and maybe higher, right? And I know we're above the yellow lug, so I can take this trade aggressively out of the zone. So then what we do is we look at the ATR. You can see it right there, 3.39, 5-minute ATR. So I will go a little bit of an ATR outside of this zone, and I will go long. So you gotta take into consideration, this is an 11-cent zone, right? ATR is, it's gonna be, what did I say, 3.39, so 3.5 points to get in. Then I'm gonna have to be 3.5 points below the zone for my stop, so that's 7 points, plus the size of the zone is 11, so that's 18 points of risk. So then I go here to see, I have my account value size in here to determine this is what you should only be risking 2% of your account size, right? And it's the same as ES, it's 12.50 a tick, so that's, I can just use ES for this. So I said 18 points. There you go, I can put on a 3-lot, right? To be only risking 3% of my, or 2% of my account size. So now, this breaks 3.5 points above here. So that's 28.75, 29.25. I will be long. Let's put an alert. Bruce, how do you set up? How do you get fill alerts? How do I set that up? It's only been 3 years since I've been using this. I figured it was time I learned that. How do you do that?
Yeah,
How do you
under settings.
Wait, I'm sorry. I had you turned down. Say that again.
Under settings.
Settings here.
And then and then it's under I think it's trade configuration. Or
Configuration.
Maybe, try configuration. And I don't think this is it, but
well, I don't feel so bad now.
yeah, I mean, because I use it so infrequently. Basically, when I just turn everything off, because I don't want to be interrupted with a trade confirmation or alert. Yeah, let me take a quick look, and I'll get back to you, Scott.
Okay. All right. So in the meantime, we'll just put a normal alert here, notification alert. Make it this sound. Little bike bell, so I know if I get filmed, but I'm sure Bruce will tell us how to do that. All right. So hanging around in this NASDAQ.
Oh, you mean a audio alert like that?
No, if I come down and get stopped out, I want to hear that I got stopped out. How do I do that without putting an alert in the cloud notes?
Oh, okay. So go up to settings again in configuration in Bookmap, your main Bookmap chart.
Yep.
Yeah, and then down below it enable sounds on trades at the very bottom.
Okay, so you can't do individual sounds for different markets.
No, no, that's it.
Okay, boo on that. But that's fine. So what does the sound like? I mean, I guess I can.
That was it. That notification that you just heard.
It's the bell sound.
Yeah.
Okay. All right. All right. For some reason, if this zone does not hold, well, that's telling me something's wrong, right? This should. This is what I was just talking about. Just looking at this, this should hold. This is soybeans again, right? Based on this and it's holding. This should hold here and do this. If this turns around and this buy ice zone breaks, which is one of the setups, broken ice, that's telling you, okay, something's up, and we're probably going to get a huge move the other way, right? So I'm expecting my thesis is bullish, but if this breaks, then okay, I have to change my thesis, and then the bigger move is probably happening, obviously, to the downside, especially with this kind of size in here. So I'm going to put an alert here. We'll go 3 points below here just to let me know that something's up. That we got below here.
Yeah, I found it, Scott. When if you want to see it visually as well.
Okay, what?
So go under settings,
Yeah.
and then scroll down to orders related dialog configuration. Just kind of you just passed it underneath the reset zoom.
Oh,
yeah.
got it. Okay.
And then in here, order confirmation. You can put something in there. Now a window will pop up, basically.
Yeah,
So stop
window.
if you
But
want.
if you want
your
right?
stop orders or whatever. Yeah. If you don't want the window, then just leave all of these blank, as
Okay.
it is.
That's
Yeah.
good to know. Good to know for everybody else too, for them to know how to trade it or know what to do. All right, so. All right, this is held. I mean, this is why I got long in the first place. We're inside here. We need this to get above this point of control, and then we're probably going to make it up to there. So, the sell
On
log.
Ice to Iceberg by ZB, 532 contracts.
You can see, guys, like, this still is not a winner. This could turn around, but the point is, how many guys? I guarantee you, some guys tried to mirror me on this trade, and they put their stops right here. Like, right now they're still happy, but if this turns around and goes like this, you're going to be kicking yourself that you didn't put your stop outside of the volume event, right? This is called Algo City. And you can see the volume it's not horrible, but it's not great. So when this volume starts to dissipate, then it's go time for the algos, which is usually right around 10 o'clock Central, right? This isn't terrible, it's about normal, but you start seeing this thing get like 50%, 70%, 60%, then you're just going to get this until the big money comes back in. I am surprised. I mean, technically, I guess, let's see where this big volume started this morning. This is another thing you guys want to watch too. Let's see which is this bar here. A lot of times it will still be in the range. Yeah, that was the first bar here. Barely got above there on this attempt here. But a lot of times you'll see range, and all of a sudden you'll see a spike in the volume. It's still in the middle, and you know something's about to happen, right? Then when it gets out of there, because traders get loaded up, and then they got to puke them out. It's that simple, right? So anyway, we did poke the head above. That's where I got long. I thought that was go time, but I will be willing to bet, and I'm betting with my long position, that if we get back above there, then you're going to get the rip. But I'm still not out of the woods yet, so we'll see. This is a lot of risk on this trade. All right. We tortured with that for a while. Kind of lost track of ES here. Let's see what's going on here. I still have not retested this latest double whammy zone, this light blue zone. So you did get an ATR above here now as well. This was prior, obviously. Again, that was the first one. But we did get an ATR above there too. So you could play that. I'm still going to wait for the most recent retest for me to get long this as well. So I'll go retest failure, right? Not just retest. That's just, you can come up with a trade plan, especially in important areas where you're like, okay, well, this should hold, so I'm going to give it a shot I'm going to buy it right there and just risk an ATR below there instead of waiting for that. But I'm just telling you, out of the thousands of setups that I've watched, this is the best entry. The most, the safest entry, I should say. All right, let's see what happened in natural gas. Again, guys, this market is the most algorithm market out there. You can see by the Christmas tree look. But that also means when the big money comes in, these algos get smoked. And this, oh my goodness, I didn't even see this. This is right after the number. This is huge sell ice. Let's mark this up. Hopefully we're still around this. Here's a little waterboarding in case you want to watch the stocks. Alright, I'm really hoping I didn't miss this trade. This looks like it's going to be a whopper. So you can see all this. I'm just making sure I got this drawn correctly. Yeah. And there was even another 180, which looked tiny in the middle of this. This is a really important zone. So let's see how I want to trade this. What are the lugs? Well, short side, again, I don't take trades. So I don't take shorts when we're this close to the blue lug. Right, I'll wait for this to break, make new lugs, and then I'll go short. So I'm not that upset I didn't go short here. I mean, the setup was up here. So this is a good example of setting up your market profile too. So you can see these are individual days, right? So this was yesterday, this was the day before, this is the value area. It's just where 70% of the trade occurred during the day. The middle is just where the most trade occurred. That's the point of control. When these overlap, I make them into one, and that's now called a composite, and that's the blue, right? So let's merge that. And actually, I can merge these two as well. This was the holiday, and then that, and then these. This overlaps that. So I'm going to make this one big composite, so it's like a 4-day composite. Merge. Merge. And then join zone. And then you come up with a story. Well, what's the story? Well, you can also set this up so you can see it hour by hour or half hour by hour. See, we opened up here, couldn't get inside this guy, failed, accepted into here. Now the expectation is the minimum the other side. Right? Already got through the point of control, so I'm fully expecting that. So let's see, I could possibly, let's see here. The bottom of this zone was 8666. That's a little scary. A little double stuff. Yeah, I mean, if that retests, but the problem is, let's look at our I'm sure the ATR is insane. Yeah. So I take that back. ATR is 74 ticks. So I can't go short that setup because I'm going to be shorting right into the blue lug. And I just have, they're extremely powerful support and resistance areas. So this kind of, I mean, you could, what I could do here, what I may do here, in this market retest, probably tied for a close second next to crude and gold, as far as you get the big area and it'll come back and retest. What I may try here, this is not the normal, remember I said I wait for ATR retest. Well, you know, if I go ATR retest and then get in and outside an ATR, well, I'm 70 plus ticks outside this and then the blue lug's right here. So that's not a good entry. I may wait, if this does get up into this, I may get short in here and then put my stop in ATR above this zone. So that's very aggressive. I don't do that usually, but I may try it here just because this is, I want to take advantage of this. This is, if this does this and then this, you're going to get a monster move lower. Let's take a look at our bigger picture stuff. That's not real promising. So this was the open, gapped up. And then this is right after the number. You know, this is still not terrible looking yet, right? This could do one of these. But if we get through this guy in this zone, then we're doing one of those. So I will play to the short side. The long side is disqualified though, right? Because we got more than 75 ticks outside of here. So this was, just say 867. Well, we've got almost 100 ticks outside of here. So I could not, even if I wanted to go long this has disqualified itself as a long because we got a full ATR outside below, right? So now all I can really take is shorts. And this short is not viable because the blue lug's so close, but I will take it if we do get up in this zone, and I have a feeling we will. then I will take a short in that zone, and I'll risk above that zone. So we'll let that play out. So let's put a little alert here just in case we do get back up here. They're already hammering it though. This could be good night greasy. Alright. Soybeans still nothing. Yes. Never retested that zone. Still done money in this dog. But we'll see. That noise is it's natural gas, by the way. They're just absolutely killing it. So in normal circumstances, I would have been in short this aggressively out of the zone, right? Because we're below the yellow lug, but I wouldn't have done it that close to the blue lug like we said. But now you can see we're getting below this blue lug. So I'm hoping that we get new lugs. So this would actually be the best scenario, right? So that sell ice was up here, monster sell ice, like close to 1,000. We break here, if we build new lugs, and this comes back, retest, and then I can go short because the new blue lug is going to be way down here. That would be ideal. And that may happen. Very likely that would happen, actually. So this will be interesting to watch. Alrighty, not a lot going on besides natural gas getting hammered. Okay guys, this is tick strike. It goes from level 1 to 15. I have mine all set at 11 because I only want to see when series, so you can hear it and see it. There's discounts on my website. Click on the banner on my website, you get discounts to that. All right, no questions, Bruce? It's pretty surprising.
No, there's a bunch I've been answering, so I'm pretty good there.
Okay. Feels like there's a lot of breath holding in this market. I was saying that yesterday too, before that huge drop. Like it's huge size, that big double whammy zone, and then it kind of like just sat there for 40 minutes, and like you can feel the breath holding, and then it just died. So that kind of feels the same here. It is interesting. This thing's just not ripping though. We all know these markets, right? They usually they don't just sit around. They rip. So for this just to be sitting here is still kind of making me nervous that that's going to happen as far as my NASDAQ trade. But again, if this breaks and this goes lower. Oh, so what I wanted to cover earlier that I forgot, so spot gamma kind of lines up to the structure stuff, right? So we talked about, and we break this zone, there is nothing here. Right? This gets below the, and now we're actually in building balance, below balance, right? So if this breaks this blue zone, whatever color that is, there is nothing here until this stuff, right? That's a straight shot, probably 100 points. And then if you read spot gamma, you can see here he says, he's been saying this for a while. For these reasons, he puts his reasons up here. Basically, they're selling, every time we rally, they're selling deltas, so on and so forth. For these reasons, we now think that a risk of 4,100 to 4,200 range break to the down is to the downside, right? There's still the opinion that break of 41 leads to a quick test of 4,000, right? 4,000 remains a large support into next week. So that is right in line with what that bigger picture chart looks like, right? And 4,000, and again, is like 39.90 something here. Yeah, so you can see it here, right there. So remember, he's talking about the SPX, which is the cash, and these are the futures. So that's equivalent to 39.94 in the futures, which would be right about here, which would be the top of this. Can you make this a balance too? Right, that would be right around in here in this zone. So I think if this gets motoring down, you're gonna see that in a hurry. And again, the options supports that as well, the options info. So that's really good information. And guys, when he says stuff like that, pay attention, because when it happens, it usually right on the money. When he starts talking about important levels breaking and quick trips, when he says stuff like this, pay attention, because it usually does it. And there's the hero indicator that he has that shows real-time option info. You can get it through Bookmap or through his site. I have it on here just because I got so much on my Bookmap.
Soybean Ice July Iceberg buys ES 158 contracts.
We'll look at soybeans here again. A second. I just want to see what these look like. So SPX, really nothing. So the blue, whatever color that is, there's the options. A lot of times you'll see, like the options will be up here.
Soybean Ice July Iceberg buys ES 170
That's
contracts.
still all happening in that zone. We'll come at it in a second, but you'll see like the market, which is the black down here, and then you'll see the options up here, and then the market will turn around. And it's not a red light, green light signal though. So don't, the minute you see a divergence, don't just be buying because of divergence is what I'm saying. But many times you can see a big divergence, especially if you see like a straight line. That means big money just came in and did something with the options. Just be ready, right? So this was really not telling me much, right? This is just choppy, and then the market's coming back. But really nothing in there. All right, so soybeans, just more. Whatever way this breaks is going to be a whopper. Another 415
Soybean Ice
buys.
July Iceberg buys ES
Still coming in.
186 contracts.
So it would behoove you to keep, even after this webinar, pay attention to this area because guys, these are the markets you should be watching. So when the markets suck like the equities do right now, you can trade this. You can trade natural gas. It's all the same stuff. The volume is volume. Trap traders are trap
Soybean Ice
traders.
July Iceberg buys ES 151
So it doesn't matter what futures market you look at, bonds, silver, wheat, doesn't matter. Let's see if I think I might have missed something here. This is 167 bias earlier. Looks like we got ATR retest. Again, they're always perfect if I miss them. Let's see here. Let's see, ATR in here is 3.74. So that would have been, actually that was that. Here's your retest, here's your failure. Over and over and over. It doesn't matter what market you're looking at. And those are the best trades where you can get retest failure and then get in. So I obviously missed this trade. Regardless of where we are in the lugs, I missed this trade. And I missed one yesterday too, so that's a little upsetting. But let's just take a quick look. It's like with new lugs, natural gas, that's what we wanted. Now, if we retest this zone fail, I'm getting in, right? I don't have to worry about the blue lug because the next blue lug is down here at 810. And that's about 400 ticks away. So, and if you don't think this market could do that, all you got to do is look at this chart, and it can do that. I mean, today alone, we went from 894. This is 600 ticks right here. It's a lot. All right, so they're selling the VIX, they're trying to buy this. And the other thing you want to watch too, if you do have this tick strike, or if you just have your charts of Russell up, Russell's been leading lately, so you start to see some serious setups in Russell in the SI indicator, or you see your tick strike at max. The markets have been following. Yesterday, this exact thing happened. We were sitting there, ES was like kind of hovering, and then Russell just kept getting smoked. I kept saying, wow, it's getting killed, and then both NQ and ES turned around and sold off. Speaking of which, did I miss anything in here? Of course I did. All right, well, for educational purposes, this is disturbing. I'm sure, again, it was perfect ATR retest, because when I miss them, they're no sweat at all. That's your zone. It's actually sell ice. We'll make it black. There you go. I told you, guys, it's over every market. It's the same thing. Look at that. Actually, I think this was not full ATR, so that'll make me a little happier. ATR in here is 50 points, so that was not full ATR, so that makes me a little happier. This was only about 25 ticks, and then it was off to the races. But if we do retest this zone, pay attention. This is almost 350 sell ice, and the zone is now a broken ice setup. Keep an eye on that zone on a retest. I don't think I would have gotten that aggressively. Let's see. we're both, oh yeah, of course I would have. This is my life, guys. This is me talking to myself all day long. So remember, above the yellow log, I take trades aggressively out of the zone. So I would have been aggressively in this trade 50 ticks above here. And I missed it. All right, so all this moved back and I'm still down 200 bucks. But this is my point, guys. Again, this is not a winner yet. But you see what these algos can do. Make them prove they can get outside of this area of full ATR.
Crude Ice Iceberg sell CL 151 contract.
In a second. So, you know, I avoided a loss. I could get out of here now. I'm not going to. Nothing's changed. If I got a new setup, I would. But hey, now I got 15 bucks. I'll buy a 12 pack of beer in Arizona. I can cash out. Now we're almost at a round of golf. The point is, how many guys said, I only want to risk 30 points on this? Stopped. Now if this thing rips 300, you're like, oh my God, what am I doing? And then you're just despondent the rest of the day. Put your stops outside of these areas. If you don't like to risk that much, trade micros. If you really still don't like to risk that much, then don't trade this market. Because the volatility is telling you you have to risk that much. And you judge the volatility by the ATR. So for the thousandth time, it doesn't matter what you want. It matters what the market wants, right? ATR is 42.64. So this is kind of in line what I thought may happen because we couldn't break below. Let's make this so you can see it individually. Right, that was the story that we came up when we put the trade on in the first place. Couldn't accept into here, got back inside here, came back down. That was where I didn't get stopped because I had my stop in the right spot. And then here we go. Guys, this is trading. I'm telling you, if you're trying to skirt the rules or you're gonna lose money because this is what these algos are here to do. They're here to make you question everything you do, right? And if you're staring at your P&L and you see that thing go down $3,000, you're like, oh my God, that was my mortgage. I got to get out, right? That's why you don't trade off of this. Turn it off. Turn it off and trade. Number one thing, I say this every week, when I finally took off, I turned off my P&L and I just started trading. And then I would trade. Again, the first couple trades you put on, you kind of know where you're at. But if you're just in the zone and you're trading your zones and you're adding, say a new setup comes up here and I'll add to it, so pretty soon you lose track and then you'll bring it up at the end of the day. There are days I'd bring it up, I'd be up like 200 grand. I'd be like, wow, I had no idea. I thought it was up like 20, right? So number one thing you can do to improve your results is turn off your P&L. Now I have a round of golf at TPC. This thing is working out nicely. Just making myself laugh, guys. So no retest here. We'll keep an eye on that. That'll be a mammoth trade on the short side. And then still right in the middle of this soybean zone. So I did miss that Russell trade. I didn't really miss this one because I was waiting for a retest of this light blue zone. We never got it. And even if you were waiting for a retest of that, we never got that either. So now this looks like this one doesn't look as, definitely looks like we're going to come at least back up to here. I'd say 41.30. So that's another 20 points away, right? Now it looks like we're just forming more balance here, right? Which is going to be still the high volume node. The top of this balance is the high volume node of this balance. So you want to watch, if we break out of this current balance through the high volume node of the prior balance, and then we're coming minimum up into here and maybe even higher, right? But it's still got a lot to do to prove that, right? This is still just building balance. This could touch here and then do that. So those are the scenarios. Then you wait for the real-time buy-in to confirm them. That's trading. That's how I trade.
Just a couple questions, Scott. Well, I mean, I'm going to answer them here. Scott uses a 5-minute chart for the ATR, 5-minute bar chart. Is there any reason why, Scott, you want to maybe explain some of that? People are asking.
It's just a shorter term chart. I mean, I think 1 minute's obviously 1 to 2 minutes is too short term. 30 minutes For instance, like this is an hourly. Do you want to be trading off an hourly ATR that's 109 points? What you could do, so I rarely do this, but so say something comes out, say the Fed raises rates or whatever the number comes out, and we do one of these, and your 5-minute ATR spikes to like 75 in here, right? Which happens all the time, right? Say this goes up to 75. Well, obviously that was an outlier event, right? That's not like the current volatility of the market. It's just one little pop. So you could then come down to 20% of an ATR, of an hourly ATR, and use that, right? So that would put you at 22 points. Again, don't do that unless it's like one event. Like, right now there's been no one event and the volatility is 40.94. But other than that, this is just the default settings for Thinkorswim. Like when I brought up ATR, you can see over here, it's a 14 period Wilders. You can just Google Wilders ATR. You can learn all about it. I haven't changed anything. You can make this whatever period you want. I don't need to mess around and put my own, spin on things. Like this is what they had and it works perfectly. Like it's fine. This is what I use, right? Don't complicate stuff. Make it as simple as possible. You don't need to be, even with like the market profile drawing. That's one thing I don't like about market profile. These guys that like, you'll get days like this, right? And they'll, like one of these where it launched out of here and they'll say, I'm going to cut this tail off and then I'm just going to use this. Don't be subjective with your stuff. Just keep it the way it is, and that's what everybody's seeing, right? You don't want to put your own spin on things a lot of times, in instances like this, because you want to see what everyone else is seeing, right? So don't be cutting. I don't like when guys use their own judgment to cut value areas and all that other stuff. So, so the point is, I don't do that with this stuff. I just leave it. Like, if it's not broke, don't fix it. You don't need to know. You don't need to be. Or if you dive in, like I had one guy in my room, I get these guys once in a while, he was just like, what about a moving average of the 14? It's like, dude, why? Like, you don't need to be wasting your mental energy. There's even a guy in my room now, he's just, and the more experienced you are, and I understand it, don't get me wrong, right? The more experienced you are, the more you think and you're trying to read into things, and he's like, well, what happened? I see here they had a bunch of buy ice here, then they came down here, and it looks like they were selling here, and then they came in. It's like, first of all, who is they? It's not just one person in here, right? So there's multiple big money, and you're never going to know what anybody is doing unless you are God Almighty, right? So why would you waste your time? Yeah, you come up with a thesis, that's fine, right? But don't waste your time like, well, what's this? I don't know if I want to trade this zone because they could just be covering their short position, or they could be hedging their option. Who gives a crap? It doesn't matter. The area is what matters. There's someone on the other side of the trade. So the area is what is important, right? If I look at this soybean area, am I going to sit here and confuse myself and say, well, there's multiple months here, and I know farmers hedge, and this could be a hedge here against October beans, blah, 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 blah. I don't care. I know this area is important. I know there's traders, big buy-ice, and these sellers are running to big buy-ice. I know this area is important, and I know when this market moves out of this area, it's going to be a big move. That's all you need to know. Stop confusing yourself, please. You're wasting your time. You really are. I'm going on my rant. I was actually pretty good for a while there. See if I've got a full round of golf with a golf cart here in NASDAQ. Almost. Yes. Woohoo. All right, so an area we'll watch if this does, you can see. So you can imagine, guys, this is why I call this waterboarding. It's very important, and I love it, but I hate it. You imagine if I'm short here and I've got to listen to this. It's like you get to see the thing ripping in your face, and you get to hear it. I said last week I was going to come up with a new thing for trading where you can smell your trades too. So if it's a terrible trade against you, like a skunk smell comes out of it. So you can tickle all your senses and just be absolutely tortured. So anyway, that's why I call it water.
S&P stopped by ES 987 contracts.
All right.
Wow. Look at that across the board on the water board.
Yeah, that's what I'm saying. That's why
that's amazing.
Guys, you can come up with strategies just with this, right? If you come back into an important zone and you hear nothing, that's telling you something, right? So again, I bitch about this thing all the time, but it is very important. Again, you get discounts on my website. You want this thing. It's and then it also, what I originally used it for, as I'm going to draw this on NES, is just to alert me when other markets were firing off, because I can't watch 15 markets at one time. I mean, granted, now I do have the SI indicator alerts that alert me to the icebergs and stuff, but I want to know if there's big buying. And again, all this is it's an algorithm that tells you the size, the speed of the orders coming in and the size, right? And then you can make it from 1 to 15. So for instance, this is one available to my room that I have this up. These are all set to 1. I don't have any sounds on this, thank God. But this you can see like Facebook 1. So I don't want to see every time it's 1. I just want to see in here when it's 11 or more, because I know some serious, look at this buying coming in, right? This would behoove you to know this is going on. Especially if you're like, oh, I'm going to fade this area. We don't want to fade if these things are lighting up like a Christmas tree. Wait for it to dissipate, then short it. Right? Again, this is just simple stuff, right? This isn't rocket science, right? That's how you want to make your trading. Don't confuse yourself. Wow, they're buying a crap out of this. I probably don't want to get short here. That's not rocket science, right? So let's change this stop run. 1,000 stops are significant. These shorts are not real happy right now. So guys, this is a perfect example, right? If you are, we talked about this earlier, if you're staring at this chart earlier, I'm gonna wait to see what happens here. We'll go to the lugs here in a second. Hopefully it'll mark it away for me. Get this stuff out of here. So we said, if I'm looking at this was this morning, right when we got on, I'm like, this is looking pretty ugly. This broke down out of this, we retested it, failed. I'm like, this goes a little lower, it's gone to the downside. Then what did you hear me say? Well, wait a second. So if I'm just staring at this, I might even got short here. Be like, yeah, preemptively I'm going short, which a lot of guys did. Those are the guys that just puked, by the way. But I said, well, wait a minute. Why, if this thing's truly bearish?
Crude iceberg sell CL 151 contracts.
Trying to avoid crude. We're not getting along lately since the war started. Why, if that was supposedly bearish, why was there all this buy ice down here? And why did it hold? Right? This is the key, guys. This is the holy grail. Right? This will tell you, is your thesis correct? Is my short thesis correct? I was ready to short that with both hands, as they say. But then I did say this. Well, what if this is so bearish? Why the hell the bias is coming in? That's fine. It doesn't mean the paper's always right. But then it held. It didn't even retest. Well, that's not bearish, right? If this is truly bearish, this should have just knifed right back through here and died. It didn't. That keeps you out of the short. This keeps you out of the short. Bar charts wouldn't keep you out of the short if you wanted to be aggressive down there, right? That's the holy grail, guys. I've been saying it. I'll keep saying it till the day I die. It's the most powerful thing you will ever see in futures trading, ever. And I dare someone to prove me wrong. All right, so let's see what's going on here. So first of all, this is important. This is called the Edge. We use this in my room. You guys get access to all this. You can see all this stuff in my room. Tick strike, this. So you can see here, this is S&P 500. All five out of the 500 stocks, 330 of them, or 78% of them, are above their 5-minute TAS boxes, which are mini market profiles. That's this. All right, just imagine this for each individual stock. These things, right? These are just mini market profiles. So when you get this extension, you get these algos that revert to the mean. So you want to be very careful initiating longs when that edge is overbought, or initiating shorts when it's oversold. And you could be looking to get out of some too, because you're like, okay, this is going to pull back here, right? So especially when you're running into prior areas and you see this overbought, get out.
Soybean
Wait.
July iceberg buys ES 151 contracts.
Cannot wait for that break out of that zone. It's going to be glorious. And so let's see where we're at. So this is a good example. Where are we at here? I'm probably going to get out of this trade. And I always get out of the red lug anyway, this NASDAQ trade. I know it's not a huge winner.
Crude iceberg sell CL 150 contracts.
So you can see this confluence too, right? We got spot gamma, red lug, and the top of this market profile, right? Pretty close. That is, I'm out territory. I know it was like a 1-to-1. It was actually more. This is probably risking 2 to make 1, which I don't usually do. But I'll give this a chance to go through. So here's another thing I told my room yesterday too. You got to always remember, you don't want to get out. Yeah, I know this is an important area, but if you just see blue bubble, blue bubble, blue bubble, why are you going to sell if nobody else is selling, right? And or if you see this thing going crazy, right? So I'll give this a second. And mind you, you don't want to go like this to try to find red bubbles because you always see a red bubble. Keep it relative to how you had it, right? So if I see this start to see a big red bubble, I'm out. Right? I know this wasn't a great risk reward trade, but the lesson learned here is don't put your stop. Did I mention that? Don't put your stop in a stupid area because you don't want to lose a certain amount. And you saw it right there firsthand. All right, I'm out of this. I'll take that money and run. That was not looking very promising, as we all know. My other markets here. All right. There are other trading accounts and other markets. So there you go, guys. What a great example. Feel the pain, understand the area. Don't stop out in the middle. Don't stop out in here because you don't want to lose a certain amount. Keep your stop and ATR outside of this zone and let it work. Don't be algoed. Don't be algoed. I can't say it enough. There's that. We'll take that and run. Now let's see where we are in ES. This is the whole reason I came over here. But these are the magical lugs, guys. These things are so powerful. Once again, ludwiglevels.com. Go to our website. She's got a 3 free day trial. Say you saw it on Bookmap and you'll get special perks and or if you're part of my trade room. So here's this. We're pretty close to the red lug here. Not there yet. 27.5. We are at extreme standard deviation of VWAP. Here's VWAP. This is one standard deviation, otherwise known as daily value area. Here's 1.5. Here's 2. So if we pop up here, this is going to be potentially a decent short, at least for short-term short. You got red lug, you got baby lug, you got extreme standard deviation, and you'll have point of control of this current profile. Granted, we will be back inside here, so it's going to be really important what this does. You can see right here, we're trying to get inside here. If this gets inside here and stays here, then your expectation is what? To make it to the other side. Just like we said, the expectation was in NASDAQ, right? We painted a picture, came up with a story of what was happening when I took that long, and I said, if it holds here, the expectation is the other side. Wow, look where we're at. Who knew, right? So you guys are seeing how I trade, how I think, right? And it's very simplistic. It's not, I've got 55 things on my chart and I'm confused whether I want to pull the trigger. Then when I do finally pull the trigger, I'm at a different area that I should be getting at. Like, guys, keep it simple. You don't even need this much stuff, right? You can. That's why in my room I've been posting like here yesterday, right? This is one of the guys. This is just dynamite. Like the value that this provides me putting my trades in here. So this is the trade yesterday, right? You can go in here and you can pick and choose what you think is important. This is the double whammy that we talked about. This is where I got short. I got short aggressively on this one. It did go ATR retest and fail, but I got short aggressively. We were above the yellow lug, but one of the reasons I did it, you'll see here, this is why you want to look at this stuff. You're accepting back into here. And we are at, if I remember correctly, an important zone. Let's go to the 60-minute. This is on my webinar. And you can see this is why I was aggressive on this trade, because this led to this directional conviction the day before, and we were right back there, and I was willing to short it again with the volume setup, and that's exactly what happened, 60 points lower. So you can go in here and you can see what all this stuff looked like. What did 5-minute look like when I put on that trade? What did the 60-minute look like when I put on the trade? Algo guy, I'm not going to get into this, but this is moving average stuff. You can learn about that in my room. This is another thing. This is like what's happening now. This thing was close to overbought with the volume setup, a bearish volume setup. That is gold, right? It reverted, pulled back, market sold off 60 points. So you see here, you don't have to use every one of these, right? You can come up with your own trade plan. I like low relative volume, which this was. I like low relative volume when we're at, this is when I got out. I like low relative volume when we're at extreme standard deviation of VWAP. That was this. With a volume setup. How gold is that? I like low relative volume at extreme standard deviation of VWAP when we're accepting back into a market profile and the edge is overbought. Now you got 4 things. That could be an A+ trade, right? The more things you have in your favor, aka confluence, the better the trade is, and you can put more size on, right? Where you can risk 4% of your account. I don't recommend that unless you get some, I recommend staying within these parameters like we talked about, right? 2%. But if you get an A+ trade, I told you guys before many times when I was trading with S&B to trade stocks, they penalize their traders if they don't put on more size with an A+ setup. They literally put them on the simulator the next day. And then I show you what the hero looked like, the spot gamma hero. Like this, guys, this is just gold. I'm actually gonna start putting these on my as like a package where guys that can't be in my trade room, I'm gonna call them my book of trades, where you can go in and see my last however many months, every trade that I put on, and then start to, you can go back and look if you don't. That's going to be coming shortly. It's going to be obviously less than my trade room, but some guys just can't be in the trade room, but they want this information. So I will be offering this soon. But if you remember my trade room, you get all this. I mean, this is incredible. And I show you my tags. What did I see? DVA2, we just talked about that. Double whammy, talked about that. Low relative volume. So do you see, and then you can go through here and be like, wow, every time I see these on Scott's, these 4 check off, it's been a huge trade. So you can just build your own trade plan based on stuff I look at or parts of the stuff I look at. You still want to always have your own thing so you trust it and not just trust me, especially so you're not cursing me out when the trade doesn't work out your way, right? You want to be blaming yourself. But the point is this is just a wealth of information. Like I can't explain it to you in words. All right, it's getting a little late here. Let's see what's going on. I feel like I've been talking a lot today. I haven't really done much. So we're still in the zone here. Still in the zone here. Keep an eye on soybeans. That is going to be a whopper. No retest of natural gas. Any questions, Bruce?
Yeah, let's just take a quick look. I've been answering them.
So this isn't a huge area, but it's important, right? So these are important areas. Remember, this is where I shorted yesterday because this is where this started the day before directional conviction. And we got the same thing. If we come up to this area, then you're really looking for shorts, right? But right here, all this is, then you got a couple selling tails. This is just the top of this balance. I mean, that's tradable. I don't love trading fades at tops and bottom of balance areas because it seems like every time I do, that's the time that it rips out of there. The best trades are like tops and bottom of balance that is confluent with directional conviction. That would be this guy, right? This zone is really important. We get up here, especially if it's a straight move there, that's going to be a good short. If we break out of here, like I said, this is going to be a good long, and this is confluent with, the problem is we're so close to the red lug, but we talked about this earlier. If we break out of here, you got break out of balance through the prior high volume node of prior balance. This should do that. If it fails, then it's going to tell you something else. But this is looking bullish right now, obviously, depending on what the zone does. All right, what's the question, Bruce?
No, I think we're pretty good here. Let's see. No, Tyler actually had something interesting a little while back. He was asking about continually talk about missing some trades. I'm just wondering, like, I was wondering about this last week of like how maybe, I mean, I know you have alerts. Is there, and you have, you already have a lot of monitors, but is there some way that, you can figure out like how to, be more kind of in tune with, the alerts or something, because
Yeah,
it's painful.
there definitely is.
It's painful to hear,
Well, there definitely is. It's not do webinars, right? So that's the problem. When I'm on webinars, I'm on one screen. When I'm sitting here by myself, I'm scanning. You guys are seeing my setup. I don't have my camera right now, but I don't even know how to do that on Discord anyway. But you see my mission control. I've got, so for this computer, I have 2 huge monitors that I have 3 book maps on each one. So that's 6 markets. And then I have another 3 monitors where I can have another, multiple book maps too. So when I'm up by myself and I'm scanning all the, all my screens, I basically see everything. But when I'm on these webinars and I'm on one screen and I'm showing you guys stuff, I'm not seeing these other markets. So that's the solution. Don't do webinars anymore. So if you guys want that, then I won't do webinars. And then I'll catch all my trades. So you don't have to hear me bitch. But if you want me to do webinars, then you have to hear me bitch.
Yeah, we don't want that.
because I'm gonna miss trades, right? And it's just part of the game too. I am watching. Here's a retest. There's another opportunity here. I may take this right now because nothing's new's come in. Let's take a look. Forgot what I was saying, but yeah, I'm watching so many markets too, so I'm gonna miss stuff anyway a lot of times. But it's just a lot harder on the Bookmap webinars.
Yeah.
So we're above the yellow lug, but here is a retest of that. Let's just look at bigger picture real quick. See if there's an important area. I mean, we got just smushed yesterday. I did just this yesterday. I was on the Bookmap webinar, but I mean, not Bookmap, my room webinar. But there was opportunities again. I got complacent is what I did. So anyway, you can see here, that's a big balance. What do? We knifed right through everything. All these zones, these are all current zone, right through everything. That is not a good sign for this market. So you're looking at free bread, free beer for everybody here going forward. This looks like this, and then down to zero. So let's look at our zones just to see, prior support is obviously now resistance. So what do you see here? Anybody see one of the 4 important areas of charting? I'm putting on that course too. That'll be on my site so you guys can see a bunch of examples. But there's a selling tail. We're moving back into that. We're moving into this prior zone. This is a zone that this launched from, right? This was also selling tail, directional conviction at the time. So this was still a zone. We knifed right through it. Here's the return. Here's your selling tail. That looks like that to me. Now you got your volume set up that we're retesting. So if we go retest fail, I already missed this. I would have been in aggressively, but now I got another chance. Here we go, right? Now my picture, bigger picture, we're above the yellow lug. I know that's more for shorter term day trading, but bigger picture, this is telling me that was that selling tail. Here's your retest. Here's the big, actually, I'm sorry. Take all that back. Let's draw this zone. This looks like it's threshold. So what do we want to see here? Did this zone, remember I said to trade prior zones and retest if nothing else comes in, that's fine. But something else came in, this was threshold in here, right? 150 plus 60 is like 200. But I will trade the zone if it led to directional conviction.
Icebergs sell CO 150 contracts.
I don't want to mess with the crude right now.
Icebergs sell CO 150
I
contracts.
took a beating on that one this morning. I got aggressive. Maybe we'll look at it here. But so this isn't really directional conviction to me, right? Downward. This is directional conviction. This is kind of like staggered, right? You want to see like straight beeline moves. So you could take this retest failure. The problem is there was a new setup since then, right? And that's this. 157, 52. You can see it's one house. Really, that's a really great thing to see, is it not? Right? Draw the zone. You want to incorporate all the prices that happen in the spike. Right? That. None of that. Let's buy ice. So technically, because this is now a bullish setup, right? We got an ATR above there. So this is why you don't necessarily want to take this as a short, because the latest setup was bullish, right? There are certain circumstances where you could say, I'm going to short this. This is not the worst short if this fails back out of here in a 5-minute ATR, but you got to contend with this bullish setup. So I'm not gonna trade retest failure right here, especially, and we're above the yellow lug. So what I'll wait for is maybe we'll move a little higher, get something new, and then short that possibly. But again, we're above the yellow lug, right? So what would be a really good short based on what we just talked about, bigger picture, if we get back up to this red lug and get a signal up here right around 1077, that would be a good short. That's what I would, but right now I'm not going to short that because something new came in. If this didn't happen, then I would short this on the retest because nothing had happened since this zone. That makes sense, right? I would play that, but this came in after. This is bullish. I'm not taking a short when the bullish setup came in after it. Hopefully that is clear. All right, this is just hanging in the zone. You can see that was a decent exit in NASDAQ so far anyway. That big bubble. Cancel that. Well, there's been nothing in here since, let's see. Missed this one. How did I miss this? That's the other thing too. It's like you get these, so you want to have these alerts. Go to File and Alerts. So you don't, because I hear so many things all day long with all these markets. I'll hear something, but I don't hear it, right? So you can see. I'm sure this is in here. What time was it? This was at 7:20. I can't believe I missed that. Was that part of the? No, that was after we put the trade on, right? Yeah. I could have actually added to this trade. Draw that zone here, but let's see, 7:20. Sure, I was the minute of chirp in the middle of chirping there. Right there. Right? That's why you want to have this up, guys.
Iceberg sell CL 297 contracts.
I'm trying so hard not to get sucked into crude right now. So this was the, let's just get rid of this double whammy, or the stepbrother zone. I can't believe I didn't hear this, especially that I was being tortured. That was right before I almost got stopped out, right? You can see this was 200 ice. It was this zone here. All right, let's see how I play this so I can complain about something else here. So do we get an ATR below here? Not even close. So I don't think I would add it aggressively there because I think we were below the yellow lug at the time. Barely, but we were. That was right around here, right? So again, if we were above the yellow lug, then I would have taken that. I could have added to that trade. So what I would have done is add to this trade, 45 points or whatever that was above this zone here, and I would have put my stop below there. That's a little, that's not the best trading because you're basically adding to a loser, and then you take a double smack